Hi, my name is Jamie West and I'm a local real estate broker. And the number one question I get is how's the market? So I put together local and national monthly videos to keep you informed on what's going on. So first off, there's existing home prices. There's a monthly report that comes out from NAR and we can see that prices are still up nicely year over year across the country. The average number is about 3.6%, and that's the historic national average for appreciation. Some people think we might drop a little bit below that. Some people actually think we've had such a strong year they might reconsider their projections going forward. So year over year, we can see this here, the FHFA report comes out. They break it down by the region so we can see exactly where we are year over year, the price increases based on that you're in. And we can see that there's definitely strong appreciation throughout the country, and no part of the country is expecting any kind of depreciation, most definitely. But we don't even see weak appreciation. And then we have the year-over-year price change from CoreLogic, and what they're showing here is two states, Louisiana and North Dakota, that did see a minor depreciation in this past year, but the rest of the country is still very strong. If we look into the forecasted year-over-year percentage change, they think that North Dakota and Louisiana, along with the rest of the country, is going to be just fine. And there is some talk of their recent blogs that they might take a 4.6 number they projected going forward, and they might uptick that number a little bit from where they had originally thought for the overall United States. If we look at the Case-Shiller report, it says January 2019, that's the last one because it takes them a couple months to get their data through. That's the most recent. Again, we can see that it is coming from a soft landing over the last 12 months, and we're getting back to that normal appreciation right at that 3.6%. Also, what just came out, the Home Price Expectation Survey, and they show a panel of over 100 economists, real estate experts, and investment and market strategists. So what they give us here are the numbers on the breakdown. So the pre-bubble, we were at about 3.6%. During the bubble, we went up 7.1%, and then the bust of negative 6.1%, and then recovery to date, we're at 6.2%, and they're gauging that from March of 12 to December of 2018. So what are they projecting looking forward? If we look at the cumulative house appreciation by 2023, they take the average of that 17.1%. The bulls think 28.3%, and even the bears don't anticipate depreciation. They still think 6.6% over that time period. So if we break it down again, the Home Price Expectation Survey, year by year, we can see that we think it's going to be a strong year at 4.3%, being the national average is 3.6%. So then we're going to kind of come down, have the pendulum effect, be a little bit lower, and then start to trend up more towards our national average. Now what's interesting and I want to point out is the blue graph, that's the slides here in the latest report, and the gray is the predictions from the fourth quarter of 2018. And you can see for 2019 and 20, they've actually increased their projections, and I think the appreciation is going to be stronger than they originally thought. So that's what I wanted to kind of show you here, is a comparison between the charts and the updated projections. So here's the Home Price Expectation Survey, and then you can see here for the next couple of years that they project. They see that there's no red numbers there. There's nobody projecting any kind of depreciation. Relatively good year this year, above norm, and then we're going to be settling down into more of a normal norm and historic averages. So put together a graph here based on the Home Price Expectation Survey. If somebody bought a house in January of 19, they would make about $42,000 with that equity and price appreciation over that time. So here I show you a slide that NAR put together showing how homeownership helps build the family wealth. They took into account the principal payments, the total gains, and the number, that's the number on the top of the columns. They went back 5 years, 15 years, and 30 years. And again, you can see the differences in the total gains. Here are the slides that break down the comparison over renting versus buying. A lot of people think, again, that the prices have gone up too much, but if we look at it historically, the percentage of income required in the 80s and 90s to rent was 25.8, where it's 27.7 now, just slightly less than it was in 2017. And then mortgage payments were 21% back then, and they're only 17.5. 2017 it was a little bit lower, and so it's a little bit higher than it was then, but still over historic averages. It's still lower to buy than to rent. So here's a chart that NAR does and puts together. They break it down on an actual month-on-month basis going back to June, and we're at the lowest levels here than we have been at 16.1%. So here's a chart showing the U.S. home ownership levels. And you can see that we took a dive during the housing crash, but we've been up now and it's been coming up for 8 consecutive quarters now. So this slide here breaks it down from the first quarter of 17 to the fourth quarter of 2018. And we can see that the percentage of people who are under 35 that own a home has gone up. So the millennials are getting into the housing market. 66% of millennials are determined to buy a home. A survey done asked, what's your ability to afford a home in the near future? 56% said they were confident and 30% somewhat confident. So it's 86% that are either confident or somewhat confident that they can go ahead and afford a home in the near future. They were also asked, when do you plan on buying a home? 10% said in the next 12 months. And then if you add to that, 30% said 1 to 2 years from now. 40% of millennial renters plan to buy a house in the next 2 years. If you add to that, 33% said going to buy in the next 3 to 5, then 73% of all millennials renting a house right now plan to buy in the next 5 years. Going along with that, so you can see that the new single-family home sales prices between $200 to $400, and that price point have gone up dramatically in the last year. Take a look at the first quarter of 2019 versus the first quarter of 18. It's jumped dramatically, 51% to 66%. So builders are now starting to build houses for the millennial. But realize with more new construction coming into play, sellers have to think about the competition in a way they haven't before. Getting ahead of the other potential sellers could be even more of a bigger advantage this year with the given market conditions. It's going to be more and more newer construction coming on the market. So if you're thinking of selling, you might want to get ahead of that competition. And you might get a price, better price now than you would if you waited. This is an overview of the resources that I used there for all those sites. And moving into the updates. Here's the average days on market in the color-coded chart. You can kind of see where we are state by state. The existing home sales, you can see they spiked up in March, so that's good there. And you see the existing home sales and what they've been doing per region. Broke it down in the thousands and then breaking it down for the new construction and new home sales. And then again, that price point for the millennial generation or the first-time home buyers, 200 to 300 is really up there. Total home sales here in thousands. And then the pending home sales went up a bit and then kind of slightly down a little bit. You can see there, based on the region and the average. Distressed properties pretty much destabilized from, went up a little bit there, but then same month over month. Home prices here, existing home prices, and then this is by the region again, and the average for the US 3.6 right in line with the historic. The Case-Shiller report year over year, and then it kind of brings it in here and shows you the graph of what's been going on, and then that appreciation level is going to been coming down kind of slowly. Forecasted year-over-year percentage changes you can see by state. And the inventory levels, so the seller traffic here, you can see stable or weak, and then the months of inventory of the last 2-year charts, and then the last 12-month chart. And again, a normal market is 4 to 6, over 6 would be a buyer's, less than 4 would be a seller's market. Buyer demand, the foot traffic here, which is an indicator of future sales, and broken down by state. And the interest rates again here, they had gone up towards the end of last year, and they come back down here nicely. And then the projections again for Freddie Mac, Fannie Mae, MBA, and NAR, and then the average of all of them. And that is it for the National Monthly Real Estate Market Update. I hope you enjoyed that, and I will see you next month with a new update.